Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition. Our focus will be on the IT services firm Birlasoft. As the company has reported its earnings, we have seen that the consolidated revenue for the company has risen 1.5% over the previous 3 months to about 1,362 odd crore rupees. The EBIT has also improved by 3.82% at 200.6 odd crores. The margins have expanded by 33 basis points as well to 14.7%, and the net profit is also up by 11.8% to 180.8 crore rupees. So all across the board, we have seen an improvement in this quarter of earnings. Now to discuss more insights from this quarter as well as an outlook going forward, I'm now joined by the top management of the company. Mr. Angan Guha joins in. He's the MD and the CEO of Birlasoft. Very good morning and thank you so much for taking the time out for this discussion on Business Today, sir. First up, congratulations for a solid set of numbers that have come in from you in this quarter. Do tell us what have been the key contributing factors this time around?
So Sakshi, first of all, thank you for having me on the show and good morning to you as well. So look, we've had a solid quarter, 1.6% quarter-on-quarter growth. But more importantly, I think our margins have really done well. We've expanded margins by 31 basis points, and our PAT for the first time has crossed the 180 crore mark. Also, from a revenue perspective, if you look at our year-on-year performance, we've delivered 10% revenue growth in dollar terms, and we've delivered about 12.7% growth in rupee terms. So look, all our verticals have delivered outside of healthcare. Healthcare has been a little soft, but barring healthcare, I think financial services, manufacturing, and energy utilities, the three other verticals that we are focused on, have delivered strong numbers.
All right. So all across the board, you have seen growth in various verticals of yours, barring the healthcare space. Let's now talk about deal wins, sir. How have deal wins panned out for you in this quarter? And what does the pipeline really look like for the new fiscal year, that's FY25?
So, Sakshi, on the deal wins, I think we could have done a little bit better. Though we've sequentially grown from a deal win perspective, we've delivered about $240 million worth of order book, TCV order book, which is better than 3Q. But from a year-on-year perspective, for the full year, we've delivered about $875 million, which is just about a 1% growth. So quite frankly, we could have done slightly better on the deal wins. But look, we've not lost any deal to any competition. Our pipeline is strong. It is almost touching $2 billion right now. So I can only say that FY25 from a deal win perspective will be better than FY24. We are working with a lot of our clients on their transformation journey. As you know, the discretionary spend is becoming weaker and weaker and it is getting pushed out. But I feel there will be a lot of deals for us to work on when it comes to the cost side of the equation. So in a nutshell, I think we could have done better, but we are not unduly worried because our pipeline is strong.
Okay, so especially on the revenue front and on the margins front, the numbers that you posted this quarter have come in slightly below the street estimates. If you could help us understand what could be the outlook for FY25 on both these accounts, both on revenue as well as on margins.
So on the revenue side, I agree with you that it is slightly below the expectations, but the 1.6% growth quarter on quarter is on a back of a very strong Q3. Q3, as you know, is a seasonally weak quarter. And in Q3, we delivered about 1.8%. So from that perspective, we are pretty pleased that the year has panned out well, which is what, 9.5%, dollar revenue growth. Now, going forward, it is hard for me to give a guidance. One, we don't give a guidance, but equally with the uncertainty and the volatility in the market, it gets even tougher. I can only tell you, Sakshi, that we will keep our margins at a narrow band. Our margins have come in at 16.3% EBITDA. We would love to keep it in that band because we will be on an investment mode. This year, again, we will give a pay packet revision a salary revision to our organization. We will continue to invest in the capabilities, whether it is on the vertical side, on the domain side, on the technology side. So we will continue to do that investment. And for the next 24 months, we will be in the investment mode. So the margins will be range bound and we will execute for the quarter.
So, any levers that later on, once you've rolled out the pay package hikes and the wage hikes, would you be betting on to improve the margin band that you're saying is a narrow band that you're looking at for the next few quarters?
No, Sakshi, we'll, apart from the salary hikes, we are always also investing in our business, right? Because we want to build a long-term, sustainable, growth-oriented business. So I would say that for the next 24 months, as we are in the investment mode, we will keep the margins in the narrow band, but while doing a lot of investments in our capability. But I can only tell you that over the next 2 to 3 years, once our revenue becomes much larger, our margins automatically will improve. But we are right now investing in our foundational capability, and we will continue to do that.
Okay. So largely I've been speaking to all your peers, larger IT players as well as the mid-cap IT players to understand, how the demand trends have been shaping up. We have seen last few quarters where continuously demand trends have been roiled under uncertainty. Will the uncertainty continue for some more time before it can finally start to show you some green shoots, or are you looking at a faster emerging trend as far as the growth in demand is concerned? How are you looking at the space, sir?
So, Sakshi, my sense is that demand will continue to be sluggish and the uncertainty will continue. Now, how long will it continue? I don't know. My sense is FY25 will be almost similar to FY24. There'll be no difference. And the uncertainty will continue pretty much for the year. But our endeavor, like I've said always, will be to continue to execute for our clients, work along with our clients in their cost journey as well as in their transformation journey, and take one quarter at a time.
Okay. You did say that, of course, you will be looking at improving deal wins as far as TCV is concerned going forward from here. Geographically, where are you betting big on that the deals and the client spend could increase from here on for you, and which will be the key verticals that you're looking at and promising outlook on the deal front?
So, look, the four verticals that we've called out will actually pan out globally, not only in the Americas, right? But clearly, Americas contribute to 86% of our revenues today, and that is a big market. We are very focused, very invested in that market. But we also want to kind of, broad base our revenues and our deals across the globe. So we've hired a chief executive officer for our rest of the world region, which is outside the Americas. And we will be focused. Given our balance sheet size and company size, obviously we can't be focused on too many countries. So we'll pick 4 countries that we'll be focused on outside of the United States. And we will make a lot of investments to grow both the Americas as well as the rest of the world region. I would suspect that, it will take a couple of quarters for the new leadership in the rest of the world to settle down till that market picks up. But Americas will continue to be the leader in growth in the medium term. But in the long term, I'm very bullish that the rest of the world will contribute significantly to our financials.
Right. So there is this expectation on the $1 billion, dollar mark as far as the revenue is concerned, which is one of the key aims or ambitions of mid-cap IT firms. How soon do you see that for you coming in, sir?
So, Sakshi, hard to comment in terms of when will we get there. If I continue to deliver strong financial performance, both on the revenue, order book, and margin side, grow ahead of the industry, then sooner or later we will get there. But look, like I said, I'm not going to focus only on the numbers. We want to focus on the capability. We want to build a fundamentally strong business in investing on all aspects of our business, including our tech transformation within the company. So we are here for the long term, and we will get to $1 billion when we get there. But I can only commit that every quarter, every year, we will deliver industry-leading growth.
Okay, and since you're constantly talking about investing in capabilities, rolling out wherever capabilities have proven wage hikes too, how are you looking at the hiring trends for FY25? Would you be going to colleges for fresher hiring this time around? How is it likely to pan out vis-a-vis FY24 for you?
Yeah, so in FY24, we hired about 500 freshers, 500 to 650. I don't have the exact number with me right now. And that will only go up. In FY25, we'll probably, hire about 1,000 people from campuses and, freshers. I think that'll form a big part of our hiring because we want to build a pyramid. We want to help people build their careers within Birlasoft. So we're pretty committed towards that. Now, the demand situation will still be sluggish. So I'm not very sure in terms of the overall headcount, how that'll pan out. But we are clearly focused on hiring from campuses.
All right. Well, all the very best to you, sir, for the upcoming quarters. Many thanks for speaking to us and giving us the insights from this quarterly earnings. And here's hoping that we can catch up very soon again to understand more about the industry trends and the company's vision going forward. Many thanks, sir.
Thank you, Sakshi.
All right, and that was the very special conversation with Mr. Guha right there as far as Birlasoft's Q4 numbers are concerned and the outlook going forward. Even though the demand looks sluggish at this point in time and there could be some more uncertainty that the industry has to continue to face, but the management is pretty confident of continuing to work on themselves, to continue to invest in capabilities and sooner or later come back when the revenues are larger to report higher margins. But right now for FY25, it could be a narrow band of margins as of now. So some are pain to go, but sooner or later the picture could emerge brighter is what the management had to say. With that, we'll wrap up, but do stay tuned on to Business Today Television as we continue to get you such interesting conversations from the top managements of various companies that are reporting earnings this quarter.
Hello and welcome to Business Today Television. I am Siddharth